Good afternoon, everyone, and welcome back to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. Well, a good day started off on a very strong footing, has now turned into a bad one for Dalal Street, with the benchmark indices giving up entirely all of the gains from the morning, and at this point of time, heading towards the day's low. If you look at the Nifty and Sensex, they're down about almost 1% each. Near the day's lows, and this is despite the fact that the cues from global markets have largely been quite positive. Asian markets were quite strong. European markets got off on a decent note earlier this afternoon. So clearly it seems to be a bit of a singular event at this point of time for our markets. If you look at the broad markets, clearly this has been a broad-based sell-off that we are seeing in the domestic market, with the Nifty mid cap and the Nifty small cap index both falling quite heavily, especially the small cap index, which has seen a correction of about 1.3% in trade today. And the volatility gauge, clearly, a sentiment indicator, the fear gauge, that also has risen quite significantly, hinting at a very cautious mood in the market. So given the fact that, we are at the last trading day of the week, how does this set us up for next week, given that, next week you have a very crucial some very crucial economic data points coming out globally as well as at home, and also you have the US Federal Reserve's monetary policy meeting as well. So at this point of time, it seems like after hitting the record highs that we did last week, the market seems to have entered a sort of a consolidation phase, and this seems to be more of a time-wise correction than a price-wise correction. That is the view at this point of time among technical analysts. They believe that it is very likely that the index could see some bit of consolidation in the coming weeks before it starts to prepare itself for the next leg of the rally. Why they believe so, why the confidence is still quite high, that is because if you look at the futures and options segment, not much of short positions are being added on the index futures at this juncture. If you look at the FPIs, their long positions have gone down from about 76% to about 60%, clearly indicating that at this point of time they are more focused on unwinding some of their long trades on the index instead of adding short positions on the index, and that is one of the reasons, on the major drivers of the losses that we are seeing on the street at this juncture. So clearly, what will be crucial for the benchmark index is to hold that 18,400 to 18,450 range. Now that is where a lot of analysts believe that the real support for the index lies at this point of time. If we do close below that level, then there could be a cause for concern. We could see a further 100 or 200 point downside, but ultimately they're expecting that the 400 and 450 level, which is where also the 200-day exponential moving average, 20-day, I beg your pardon, exponential moving average of the index is also there. Clearly that should be a good support zone and a good buying zone as far as the index is concerned. So heading into next week, it seems like the traders and analysts are not expecting big or large upside or downside movements on the index. They're expecting some bit of consolidation to continue over the next 10 to 15 days before we see the next leg of a pullback, probably towards the record highs near 18,850, 18,900. So that is the setup at this point of time for next week. And I think while today's sell-off may concern a few of the investors out there because of the intensity and the quickness or the swiftness with which we have seen the markets give up their position over the past 1.5 hours, I think it could be just some bit of unwinding of long positions before the weekend, and you could see some bit of strength coming back in the index Monday morning when we open for trade. That said, moving on to the stock takes, and there were quite a few stocks buzzing in trade today. Of course, we mentioned in the morning about Paytm. Paytm saw a very decent trade this morning, higher by about 7% in trade. But three other stocks that really stood out for me, I beg your pardon, were Syrma, SGS, IndusInd Bank, and Yes Bank. Getting first with Syrma SGS, now a very interesting report coming out from Bob Capital's. Now, if you look at, this is a recent listing stock. It listed only about 2.5 months ago, and after a very strong listing, the stock seems to have gone under the radar. It's gone off the boil, because if you look at the return so far since its listing, is down about 7.5% in trade at this juncture, clearly indicating that some of the IPO investors have been more focused on booking their profits instead of buying more on this counter. But Bob Capitals believe that at this point of time, Syrma is providing a very attractive opportunity for long-term investors out there in the market. Now, Syrma, if you look at their listed peers, these are Dixon, largely Dixon Technologies and the likes. But according to Bob Capital, what differentiates Syrma SGS from the likes of Dixon Technologies, the fact that it does not only provide electronics contract manufacturing services, but also it provides value-added services in terms of original design manufacturing. Because of those original design manufacturing contracts, it tends to earn higher margins, even though its volume levels are not as close to, say, what Dixon Technology can turn around in a year, but its margin level is still much higher because of the value-added services it provides to many of its clients across the world, not only in India. And given this niche business model and the fact that the management at this point of time is quite focused on expanding its global footprint, its export footprint, Bob Capital believes that we could be in for very, very strong revenue growth for this company in the next 2 to 3 years. They're expecting revenue growth anywhere in the range of 44 to 47% on an annualized basis for this company. As far as the EPS is concerned, there Bob Capital is penciling in a 44% annualized run rate of growth in earnings per share for Syrma SGS over the next 3 years. So clearly very, very solid, big numbers from Bob Capital in terms of the company's earnings growth, and they believe at least that this could translate into at least a 40% upside in the stock over the next 12 months and even more going ahead. And that is why I believe that this could be a stock to really watch out for as far as 2023 is concerned. It could possibly be, a dark horse contender for being, among the best performing stocks in 2023. Moving on, the second stock on my radar today is from the banking space. IndusInd Bank is the stock. The stock has outperformed the market. If you look at, it's trading higher by about 1% today, even when we are seeing a very broad-based sell-off across, the market caps of large cap, mid cap, and small cap. Now, this outperformance clearly is a signal that at this point of time, investors are very, very optimistic on this company, on this lender. The past 2 quarters earnings have clearly been a turnaround story as far as IndusInd Bank is concerned. It has helped develop or strengthen the confidence on the company's on the lender's asset quality as well as the loan growth profile. Now, if you look at it in terms of valuation, clearly, despite the rally that the lender has seen over the past 12 months, its valuation are nowhere close to the sort of valuation that you are seeing from, say, for example, the sector leader at this point of time, that is ICICI Bank, or the second banker behind it, that is HDFC Bank. So there is a lot of scope for valuation re-rating according to analysts on this counter, and that is one of the reasons why you also saw IndusInd Bank named in the top 10 picks for the next year by Jefferies India as well. Now, Jefferies India did also say that with the asset quality issues of the lender now largely behind, of course, barring any negative surprises that may crop up, they tend to happen with lenders from time to time. But given the recent evidence, it seems like the asset quality issues for the lender are largely over, and that should help the lender's return on asset, which is a very key metric as far as banks are concerned, that to recover from about 1.2% in FY22 to about 1.8% in FY24. Jefferies is also expecting the return on equity of the lender to go in excess of 15% going ahead. So clearly a very bullish call coming out from analysts across the board on IndusInd Bank, and you can see that in the stock's performance at this point of time, higher by about 1%. The last stock, another banking name, but from the mid-cap space, and this is Yes Bank. Now, a big trade happened on Yes Bank today. That is one of the reasons which really drove the stock higher by almost, as at one point of time, almost 14%. Now it has come off a little and is trading higher by about 10.5 to 11%. But a large block trade happened. Clearly, given the pricing of the trade, that really has got traders buzzing. Then maybe a big marquee investor has entered Yes Bank at this point of time. Now, after that block trade, an hour later or half an hour later, we also got reports coming in that RBI has finally, given the lender the go-ahead to sell about 9.9% stake each to Carlyle and, Advent International. So those both PE investors who wanted to come on board as financial investors in Yes Bank, they have now got the go-ahead from the banking regulator. So that is clearly a very big positive. The capital infusion that will happen through this deal should be an enabler for growth for Yes Bank going ahead. Remember, Yes Bank has taken meaningful efforts over the past 2 years to bring down the asset quality issues that had clearly led to almost at one point of time the failure of the bank. So with the asset quality issues behind and the advances side of the business now starting to do quite well, it seems like Yes Bank is starting to win back some of the confidence of not only investors but depositors as well. Deposit growth for Yes Bank was quite strong if you look at it in the first half of FY 2023. So if the momentum of the business momentum continues the way it is continuing, and with investors desperate to own banking names that are available at reasonable valuation, I think Yes Bank could stand out quite well in the coming months as well as quarters going ahead. Clearly, you can see that on the screen. The stock is up almost 11% in trade at this point of time. Taking a check on the market, how are we placed for the closing bell? It seems we are seeing a little bit of comeback from the bulls at this juncture. The Nifty and the Sensex down now about Nifty down about 0.6% at this point of time. So we have come off a little bit from the day's low of about 0.9%. But I think the mid and small cap space is where the pain really is being felt at this juncture. The Nifty mid cap index is down about 0.3%, but the Nifty small cap index is down about 1% in trade. It was actually down about 1.3%, so it has also seen a little bit of a comeback at this point of time, but clearly we are headed for a very negative close on the market. That said, sectorally, the banking index is still holding firm. The Nifty Bank Index outperforming the market higher by about 0.1%, but it is the IT space. Clearly, the biggest loser of the day is the information technology space, with the Nifty IT Index down about 3%. After that, quite a damning report coming out from Credit Suisse, wherein they have warned investors that valuations of IT companies at this point of time, despite the the correction that we have seen in the entirety of 2022, are still unsustainable, and therefore they are fearing that we could see another 10 to 27% downside on many of these major IT companies going ahead. So clearly a very, very weak setup as far as IT stocks are concerned heading into 2023. Apart from IT, you had Nifty Metal Index taking a beating after what has been a very, very strong past few weeks for the metal space. Nifty Metal Index down about 1%. Nifty Reality Index continuing those losses from the RBI policy day, policy meeting day on Wednesday, down now about 1.4%. Clearly, the fears of growth slowdown in the real estate space is materializing among investors, with interest rates inching higher. The question now is whether home buyers will be willing to take loans at rates that are now available, which are much higher than what they were 2 years ago. So a lot of question marks on the real estate space at this point of time. We'll have to wait and see fresh data points to see whether home buyers are shirking off the higher interest rates, or whether that is now taking a toll as far as residential property demand is concerned. On that note, let's take a check on what you should be watching out for next week. And of course, all of the attention would be on the US Fed, because the US Fed's monetary policy outcome will come out on Wednesday evening, our time. Therefore, our markets will react on Thursday. So that will be, of course, the big event that everybody will be talking about the entirety of next week. But apart from that, you have some key data points coming out in Germany, in the US itself, as well as in India. In Germany, you have the November CPI inflation data coming out around the middle of the week. Similarly, you have the US inflation data coming out for the month of November as well, I think just ahead of the US Federal Reserve's monetary policy outcome. So that will be a very critical data point to watch out for. And also, let's not forget, on Monday, you will have the industrial production data for the month of October coming out in India, as well as the CPI data, CPI inflation data for the month of November coming out as well. So clearly, a lot of key economic data points as well as the monetary policy event next week. It will be a data heavy and an event heavy week. So it possible, very likely that the indices may not do much, but volatility clearly will be quite high. On that note, it's a wrap. The weekend is coming up. And of course, you guys have been begging to have Santo back on the show, and he will be there when we meet again on Monday morning. But till then, keep commenting, keep giving us your thoughts, your views, your stock queries in the comment section below, and also keep following us on the social media links that you can see at the bottom of your screen. Till Monday, it is a goodbye. Have a great weekend and enjoy yourself.